Welcome to Phil Oil USA, your international source for physical precious metals. Hi, I'm Albert Johnston. I'm the Director of Sales and Marketing for Phil Oil USA here in New York City. It's been an interesting last 10 or 14 days in the gold market. There's been an extreme amount of volatility. We've seen intraday lows of around 1980 spot price, going up as high as 2050, going towards 2060. So that is a very good range in a short period of time. What's putting a base on gold, and what I mean a base of a price somewhere around the $2,000 range, we're calling a base price on this, is that we have de-dollarization going on. We have escalating geopolitical tensions. We have further central bank accumulation of gold, and we have the comments from the Feds, especially the recent comments recently, where they're talking about making 3, if not more, interest rate cuts in the coming year. I want to read a quote here from someone. Rona O'Connell, who is a very good precious metals analyst out of London, made a very good summary, and I want to read this. I think it sums up the market quite well, what's happened here in the past week. The markets took the outcome of the Federal Open Market Committee's final meeting of 2023 as again postulating an easier rate prognosis than it likely to be the case. Once the statement came out and Chair Powell's press conference got underway, yields dropped sharply and gold ran up from 1982 to close to the session in the United States of 2025, then tested 2050 the following day for a 3.4% gain. Silver rose by just 7.6%, in keeping with the relationship between the two metals from 2250 towards 2450, has since given back roughly a quarter of the gain and is trading just below 24 as we speak, below which there is a reasonable body of price support. Silver's recent activity certainly suggests that for now, at least, it is preferring to concentrate on gold rather than responding to the slowing in the U.S. economy, the struggles in Europe, and the comparatively anemic recovery in China, bearing in mind that 60% of silver fabrication demand is driven by industrial uses. It is also important to remember here that the outlook for solar industry is particularly very strong and benefits silver, as does the electrification of the vehicle fleet, underpinning silver's fundamentals for the longer term. 14% of the global mine supply on an annual basis of silver only goes into the production of silver for solar panels. And that industry is growing bigger and bigger and bigger. Now we have a lot of use in fuel cells for electric vehicles and the batteries. So you see there's a lot of applications on the physical level that's giving silver a good foundation for the future here. Platinum, on the other hand, its fundamentals are very strong too. It doesn't have as many uses as silver does, but it's looking very good on the stronghold. In fact, during this whole volatility that we had, platinum really did not lose much, and actually it's gained some, and it's gone back close to the $1,000 mark, trading around $961 as we speak right now. Okay? Thank you very much for hearing me, and I'm wishing you a very pleasant season. And please contact me at the number or email that's listed on the screen behind you on any questions you may have, or if you'd like to talk about a strategy of how to get into the market, or if you have any referrals. In the meantime, I'm wishing you very pleasant holidays.